Good afternoon. So, first of all, I want to thank you all of you to be here, and I hope you will enjoy it. So, I will begin by introduce myself. I'm Sarah. I'm a French student in Master in Finance. So I come here. I decided to come in Singapore to learn more about crowdfunding and Islamic finance. That's why I chose Club Ethis, and it was the role model for me. So before the main presentation of the co-founder of Club Ethis, Umar Munshi, let me introduce you the Indonesian partner of Club Ethis, Ronald Wijaya. He had, no, I didn't finish yet. He came today just for you. So Ronald had the entrepreneurial spirit since his youngest age. He had few companies in such as manufacturing and commodities training. Passionate and hardworking, he joined Club Ethis in 2014, and he became the head country in Indonesia. So, Ronald Hijaya, come on.
First of all, I would like to say thank you to Sarah for the introduction. I feel honored. Okay, as she mentioned, I'm a Club Ethis representative in Indonesia. Well, Club Ethis is a Islamic finance crowdfunding. Well, I'm quite honored to say that we are the first Sharia compliant real estate crowdfunding in the world. So, okay, okay, maybe the first question you will ask for investment, why Indonesia? Well, actually there are two main reasons. The first of all is the shortage of the housing, of course. Based on 2014 data, the developers can only fulfill one third only of the needs itself. So the market is still huge. Indonesia is a sleeping giant. They're taking a nap now. Second of all, of course, the race of the middle class economic people. If you, my question is, have you visited Indonesia recently? Yeah? Have you ever seen how property agents sell their property now? They can they can sell hundreds and thousands units in one day. And sometimes you have to buy it for the waiting list. It happens in like my residential. In 4 years' time, the growth of, like the capital gain from the property itself, almost 400%. It's crazy because you can tell by the population itself. Okay, now I would just like to share with you. Currently, we are a few projects also where we are tied up with reliable partners. That's what we should do. For example, now the Indonesian museum record for what do you call it? Sorry, my English. Yeah? We call it MURI, Museum Record Indonesia. So now we are tied up with the record holding for the property agents who can sell that units. So that becomes our, what do you call it, leverage, yeah, to basically promote our properties in Indonesia. Well, okay, but maybe I cannot, without further ado, I will introduce you to Club Ethis co-founder, Mr. Umar Munshi. Please welcome.
All right. Good afternoon to everybody. Thank you for joining us. Thank you for the both of you for sharing. Today, I'd like to share information. I don't have much time, but it's going to be a snapshot. It's going to be a snapshot of what we do, but before that, the theory of ethical and Sharia compliant investment, in this case specifically for crowdfunding. All right? So, before I continue with this, a bit of introduction about myself. I am Singaporean. I've lived a long time in Indonesia for about 8 years. And I've been doing my own business since I was 18, which is about 2 years ago. No, it's about 15 years ago. So I'm in my mid-30s now, early 30s, and crowdfunding so far has been very good to us. We started as the lean startup. We started with almost nothing. We started with no resources. It was just a group of friends who came together. And right now we're 1 year, 2 months old, and so far the volume that has been transacted through our platform is approaching 3 million. So that's not too bad for a start. Right, so on with the information that you are here for. Ethical and Shari'ah crowdfunding. Sorry, I keep holding it backwards. Okay, some very important legal disclaimers, which you can look at. All right, Islam. Islamic finance, all of you have heard of Islamic finance, I assume. My point here is Islam is different from Muslims, and that's different from what the media tells you, right? 1/4 of the world population are Muslims, and that's huge, 1/4, right? Now, Islam means peace, right? So that's not what many Muslims portray, and that's definitely not what a lot of the Western media portrays. But the word Islam itself is derived from the word salam, which means peace. Okay? So how do we attain peace? All religions have a philosophy, an approach, a structure, a system of life, of living, right? And of course, from religious perspective, there's a faith element where we believe in the afterlife. But in Islam, we attain peace through justice, fairness, equity, and a focus on the community. So if Islamic finance is truly Islamic finance, then these are the objectives of Islamic finance. Right? So what's happening right now? Okay, let me give you an idea of the global Islamic finance industry. We see in the first table on the right, Malaysia, Saudi, Emirates, Kuwait, and Qatar. And in the middle table, we see the size of the funds in the Islamic finance industry, and it's grown tremendously. And in the last infographic there, you can see that it has grown. Right now, the estimate is about 1.3 trillion in total. Right? But this is still very small compared to the conventional financial world. Right? It's a very, very small portion of the conventional finance ecosystem. So Islamic finance is something fairly new. It's been around for maybe about 15, 20 years, but it's only gained significant traction in the past 5 to 8 years, especially in Malaysia and Saudi Arabia. So Islamic finance is growing very quickly, right? And the interesting thing is, when I go to Malaysia and I speak to my friends there in the industry, more than half of those who engage, of the customers of the Islamic finance industry in Malaysia, are non-Muslim. Right? So that's something quite amazing. Right? In Singapore, maybe the awareness of Islamic finance is not so high or not so strong yet. At the end of the day, if non-Muslims are investing or putting their money in Islamic finance, it's definitely not because of faith. Maybe partially it's because of their alignment of ethical values. And at the same time also, because it's something new, Islamic finance tends to give more. It tends to give better returns. It tends to have a better outcome or better performance over the past few years. All right. Now, Islamic finance. A few of you came to our booth earlier, which is just over there, and asked us, "What is Shari'ah? What is Islamic finance?" Right. And that's what I'll attempt to explain in the next few minutes. But before that, this is how the Islamic finance industry is separated according to sector. Banks, Sukuk is Islamic bond, funds, and insurance. And in total is about 1.3 billion. And right at the very bottom, we have a very interesting statistic. Crowdfunding less than 10 million. There are only a handful of Islamic crowdfunding platforms in the world. And when it comes to real estate, we are the first. Before this, there were a few others. And just very recently, a few more have come out in the news. And we are all in touch with each other, trying to grow this infant industry. So in terms of potential, I strongly believe we are in the right place, in the right sector, in the right segment at the right time. And our growth, which has been purely organic growth with no marketing budget and with no promotion or little promotional activities as on Facebook and LinkedIn, that has proven to us that there is this big market gap that we can serve, and we hope more people come forward and step forward to work with us or to also start up Islamic finance P2P platforms, right? Okay, Sharia is essentially Islamic law. It's a framework which is derived or which is taken from the holy book, which is the Quran, and the sayings of our Prophet. Yeah? So this, some of this is set in stone, is fixed, is permanent, it doesn't change over time. And there are certain portions which over time evolve according to the societal needs or the situations. Yeah, so that's the Sharia. It's a very simple idea, but of course the workings of it is quite intricate, and that's why we have a Sharia panel, right? So in Islamic finance, especially in the more developed markets like Malaysia and Saudi Arabia, every Islamic finance institution needs to have a Sharia panel, and these are experts who have memorized or understood all of this information, and they have come up with their guidelines and their rulings. Yeah? So for myself, I am not in a capacity or with the knowledge to come up with such rulings. We outsource it to Islamic finance scholars who decide on whether what we do is correct or whether we need to change something or whether we need to drop the idea altogether. Yeah? So Sharia is very important. And when you follow Sharia, essentially whatever you're doing is called halal. Yeah? So when Muslims eat halal food, this is food that is manufactured or processed according to Sharia. And so that's how it's all linked up. Here are a few fundamentals of Islamic finance, and this is very interesting. I can spend an hour talking about this, but I'll just give you a brief idea. Firstly, no interest. And this is something that, in general, many conventional finance people find difficult to understand or even accept. Why no interest? Interest is what you learn in the first few chapters of economics, right? That's how money works. But in the Islamic model, interest does not exist. Interest cannot exist. Interest is strictly fixed, written in stone, cannot be earned, right? And cannot be paid. And at the same time, you cannot even be a witness to an interest transaction. So interest is a very, very big something that cannot be done in Islamic finance, and is written in our holy books. And the reason for that is because we believe, or the underlying logic behind this prohibition of interest is that interest creates injustice. Those with money now are empowered to oppress those with no money. Right? If we look at the history of the modern financial systems and we delve deeper into why, for example, Africa is still in its state, it's largely because of interest. Yeah? So in Islamic finance, it is about the sharing of risk and the sharing of return, whereas the charging of interest is the transfer of risk, where the lender has no risk in that sense. Yeah? So it's strictly prohibited. The rest are also equally important. Risk sharing, as I mentioned. Industries have to be halal or ethical. Yeah? No casinos, no alcohol, no weapons. These kind of industries are forbidden. And there are certain screenings. So excessive debt is disallowed. Right? Certain forms of debt are allowed, but excessive debt is disallowed. And in general, there will be significant asset backing also. Thus, in the past 10 years, especially during times of crisis, Islamic banks and Islamic products have statistically performed better in the capital markets as opposed to the conventional products. And that is because they have less leverage. Yeah? So they're less exposed to this kind of risk. And the last two, having contractual certainty, it's to prevent any manipulation or any unfairness arising out of unclear contracts. And the last one is speculation. So what Islamic finance promotes is creating real value, right? Not flipping based on speculation, not just studying trends and just making money out of it, not making money out of money. Yeah? Islamic finance is about creating value for the community. So here comes Islamic crowdfunding, the new kid on the block. Islamic crowdfunding as I mentioned earlier, how we do it, right? There are many ways of doing it. Firstly, there's risk sharing. Yeah? So debt structures are out because we can't earn based on debt. We cannot charge interest, so we cannot earn if you were to give a loan. So what we do is Mudarabah. Mudarabah essentially means sharing or equity or profit sharing. Yeah? So there can be two possibilities. It can be equity crowdfunding, which is what it seems to be growing quite fast right now. But how we do it, because we are focused on Indonesia, and it is very difficult for foreigners to have equity in Indonesian companies. It takes a long time and a lot of money. So how we structure our model is that it's Islamic project financing. Yeah? So you are not investing in a company, you're investing in a project within a company, and whatever profits are earned from that project is divided. Yeah? So that's the first structure. And we have introduced an innovation, something that is, from what we know, is new. Sometimes investors still want to know, right? They're still used to the conventional mindset where I want to know that I'm going to make 10%. I want to know that I'm going to make 20% or 30%. So what we do is we put that markup or that percentage as a target with no time frame. So if it takes 6 months, then everybody is happy. If it takes 1 year, then you're still happy to get 10, 20%. If it takes longer, then you have to wait. That is the risk that is involved, and there is still risk. So on an annualized basis, your margins do change over time. Right? It's not a fixed interest per se. The second thing we do is called a Murabaha. A Murabaha, these are the two of the common structures in Islamic finance that we have adopted. A Murabaha is essentially trading, right? But it is transparent trading. For example, you need to buy this clicker for your company, and you don't have the funds, so you come to me. So I'll be a middleman trader. I'll buy this at $100, and I'll inform you, I'll sell this to you at $120, you pay me back next month. That is allowed. It's not interest on money. It's not debt-based, it is a transaction. Yeah? So a Murabaha is something that we realize a lot of our investors are also quite keen on because the returns seem are generally more secure or more stable. Yeah? All right. Let me then talk about Islamic banking just a little bit. Recently I published an article about Islamic banking versus Islamic crowdfunding on IFN, Islamic Finance News. Islamic banking is, in a sense, handicapped because it has to fit into the conventional system. Right? Whereas the conventional system is fundamentally runs on different principles. So, what happens is that yes, there is asset backing, it is less speculative and so on, so that makes it maybe more stable or more attractive to some investors. But because it is like it is from a different family, it's a child put into a different family, right? Because of that, it still has to follow certain guidelines and mandates, and the due diligence parameters of Islamic banks is very similar or the same as the conventional banks, right? And based on this also, they are unable to fund projects that are seen to be not bankable, the seed or the mezzanine level. And of course, microfinancing will be very difficult for Islamic banks, and SME funding also be very difficult for Islamic banks. So at the end of the day, an Islamic bank strives or attempts or is supposed to assist Muslims and the general community outside of the Islamic world to have a more ethical approach based on our Islamic principles. But eventually, it only manages to do this to a very limited extent. Right? It is Sharia compliant, but many today are discussing or debating about whether it is Sharia based. Right? So it is structured in a way that makes it acceptable, but does it fulfill its original objective? So the last few points here seems to imply that they cannot, or they just are not in a position, Islamic banks are not in a position to actually provide this kind of value at the grassroots or the community level. So what we are doing right now is we are trying to maybe reinvent the wheel a little. We are trying to create a new approach, and this approach is very similar to what Mr. Subesh earlier, not here, from Maybank mentioned. Islamic banks, specifically, should and must work together with Islamic crowdfunding, right? On the conventional side also, but more so Islamic banks so that it can fulfill its objectives. Before the project is bankable, crowdfunding comes in. When this seed funding or this initial funding comes into this not yet bankable project, that funding can enable this project to reach a level where the banks can come in, right? And we can actually negotiate and discuss and plan with the banks beforehand so that our crowdfunding members have this certainty or this confidence that the banks will be their exit. Yeah? Let me give you an example in a short while. In this way, there's less risk for both sides and everyone benefits. This is a case study of a recent project that we crowdfunded, and we started 2 weeks ago with a target of 204,000 Singapore dollars. It's an Indonesian project, and just yesterday we got our final dollar, and this is already fully crowdfunded. Yeah, so in about 2 weeks it was 200,000. How this works, to me this is our best project so far. An Islamic bank in Indonesia has been working with this developer for 4 projects, right? 4 different projects. All the projects have done well. And now the developer is induced into having a project beyond its scale or beyond its capacity by the government actually. So they came to us, right? So the bank is supposed to give funding to the developer upon the hitting of certain milestones or benchmarks, specifically the infrastructure, right? But the developer does not have sufficient funding to do this. So what happens is that they sell 50 houses to us at 204,000. Land is just land, there are no houses yet. 50 plots of land for 50 units of houses are sold to us, roughly about $4,000 per plot of land. This is affordable housing for the poor. Yeah, so it's really a low quantum. And in 2 weeks we cleared that. And these funds from this purchase from us was used to develop is being used to develop the infrastructure. The infrastructure at this point in time is already 70% complete. Yeah? So this 30% will take maybe about 6 months or so. And when that happens, the bank will release $550,000 to the developer, and the developer then buys the units from us. Yeah? The original seller was the landowner. We bought from them. Then later on, we sell to the developer. So we become a middleman. This is a Murabaha, right? So this is how it works. And we earn 25% in about 6 months, right? Indonesia has incredibly crazy margins, and at times we have to take more of the share as we are a developer there, right? We own a development company there. We have to take the lion's share of the percentage and give a smaller portion to our crowdfunding members, because if we give them too much, they will not believe it. People are scared of too much profits, right? So usually we share 50-50 or 70-30. And people are happy because at the end of the day, they still make something which to them is good. Yesterday, we had one very small project that was completed. We exited from the project. We gave funding to a contractor, not specifically real estate or asset purchase, but we gave working capital to a contractor. Very small, 50,000 around there, 60,000, yeah, $60,000. And because they had a purchase order and based on the work order, and based on the work order, we were comfortable with the risk. We opened it up to a few select crowdfunding members who we knew had the risk appetite. We spoke to them, and together we invested, partially from our money and some from them. And yesterday we completed the project 4 months? No, 3 months. 3 months, 16%. That was the gross profit in Sing dollars, right? Supposed to be 24%, but because of the rupiah fluctuations, it became 15%. For this particular project, what we do is we fix the exchange rate. We get 25%, but we give our investors 8% in Sing dollar. Yeah? Okay, so I have 1 minute left. Important thing here is that all parties benefit. So this is an example, probably the first such example that we know of, where crowdfunding actually comes in and supports a project so that the bank can then come in and we exit when the bank comes in. And this is a model that we hope to emulate and replicate throughout Indonesia. Right. Very quickly, this is my second last slide, I believe. Islamic principles, I just want to share this, are universal principles. Right? You don't have to be a Muslim to engage in Islamic finance like what the Malaysians have shown. In Islamic crowdfunding in Singapore, we have many non-Muslims who have also invested with us. And we don't differentiate people by religion. We help the poor. We focus on the community, harmonious developments, environmentally friendly developments. That's what we do. So we can be considered ethical or impact investing also. Yeah? All right. And just on time, this is the end of my presentation. I encourage all of you to go to our website, clubethis.com. Membership is free. At least you know what we are doing. At least you know the opportunities that come by. We work with a few partners. The industry is small, and we believe in collaboration. We believe that in an infant industry, that we must always share resources, especially for small guys like us who are growing fast. We need to be able to leverage. We are very thankful to Mr. Getigo. The first time I met him, from start to end of our meeting, all he said was, how can we help you? And today he has helped us a lot. They are our partners. We have a few partners. Capital Boost is a spin-off platform that was just launched last week. We have only one project so far, which is based in Indonesia. Swiss Crowd is a Swiss crowdfunding platform. They are very big. They do big projects. They've done about 2 billion euros so far. So we are exploring some form of collaboration, and we are already partners on that also. Sekolah Fund is started by some students in Malaysia. I have a tuition center that's my long-running business, and the founders were actually my students. Yeah, so they were inspired by what we were doing. And Sekolah Fund is essentially crowdfunding for scholarships, to give scholarships to poor students right now in Malaysia. They were also part of the Maybank, recent Maybank event. And last but not least, of course, is our law firm, Mudarabah Law Corporation, that has helped us to structure all our activities in such a way such that the authorities are happy with us. And over time, we hope also, as what has been mentioned before, we hope that there will be more regulation to facilitate, not to block, but to facilitate the growth of crowdfunding. And Malaysia has been very progressive with this. They have approached us twice already. We've gone to the Securities Commission to speak to them. Because of our structures with no equity, we don't need the license over there. And we look forward to having you on board, to working closely together with any of you, whether you're a crowdfunding platform, you're an investor, you're an institutional investor. At the end of the day, we are open. We want to do good business. We want to do business that's good. Thank you very much.